Here's a question for you guys, and you have 2 seconds to answer. You cannot think too much about it, so whatever comes to your mind first is your answer. Here goes. If you had $100,000 in cash, would you rather, number 1, save it for a rainy day, number 2, invest, number 3, pay off low-interest debt, or number 4, not sure or it depends? Let me know in the comments what you think. I'm guessing there are people out there that fall in the categories 1, 3, and 4. Personally, I would pick number 2. Let's talk about why this is important, especially now. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything that impacts our money. Bank of America published their Millennial Report for 2020. Apparently, 48% put money into savings every month, of which only 28% invest. To be honest, I would have expected this number to be a lot higher. In this video, I want to talk about why saving is losing and how you can better manage your money. Unless you're living under a rock, you've noticed the value of dollar relative to other currencies is steadily declining. The Fed has implemented a series of monetary policies to combat the pandemic and the recent slowdown. Basically, it has injected a large amount of money into the economy and kept interest rate low. The hope is to keep the economy afloat despite having high unemployment. This has caused the dollar to plummet in recent months. The current sentiment is mixed. Some believe that with recovery on the horizon and the massive drop in dollar in the recent months, dollar index has bottomed. Others argue that another 13 to 14% drop is in the making in the next 2 years. See, when dollar is falling, we have less incentive to save because the value is going down and purchasing power keeps dropping over time. You end up getting fewer dollars when exchanged with other foreign currencies. By keeping interest rate low, the Fed is hoping that you and I will spend more, maybe buy a new house or a new car, since money is cheap and this will stimulate the economy. Business will borrow more, which should lead to investments and employment opportunities. Where am I going with this? In an environment where yield is practically zero, saving money is stupid. Cash is trash for real. Irrespective of where the dollar goes, history suggests there isn't much incentive for you and I to save. Here's another way to look at this. Let's assume today you need $80,000 annually to meet your expenses. 20 years down the road, the purchasing power of $80,000 will drop significantly and you will need a lot more to maintain your current lifestyle. Assuming 3% inflation, you'll actually need $145K. Inflation reduces your purchasing power or value of dollar over time, and something you need to account for. You might think your money is safe, but by leaving money in the bank, the fact is you're actually losing money every day. Today, the best high-yield savings account offer 1% annual yield. This is not going to account for inflation. You will still lose money over time. In other words, leaving money in the bank is stupid. Indeed, banks are making more money by lending your money out. Alright, so you're convinced, but the question is, what do you do with your money? The government wants you to spend, but that does not mean you go out shopping for a new laptop or clothes. You need to make your money work for you, meaning you need to invest. Turn your savings into investments and start building wealth. Remember, the goal is financial freedom so that you never run out of money. Now, there are number of ways to calculate how much money you need to attain bliss and quit your job. I've talked about an approach that you can start with. Take a look at this video. Once you know how much you need, let's discuss what you can do to hit that magic number. How about investing in stocks? Stocks return an average of 7 to 8% annually. The best way to get started is by opening an account with an online service like Robinhood or M1 Finance. It literally takes minutes. To some, investing may be intimidating. Keep it simple and start by putting your money in ETF SPY. It gives you exposure to top 500 companies and is the smartest way to get started. VOO is another option that provides similar exposure. You'll find all the big names you love, including Apple and now Tesla. Assuming you start early and invest consistently, you will earn financial freedom, and hopefully you don't have to wait till you hit 60 to travel the world. Of course, there is a lot more to investing. Take a look at this video where I talk about the best ETFs to invest in and share some sample portfolios you can start with depending on how much risk you're willing to take. Maybe you like growth or compounding of dividends, or just want to stay as diversified as possible. You will find a portfolio that meets your investing style. If stocks are too volatile for you, real estate is another good alternative to park your cash, as it operates outside of the stock market. Either physical real estate or invest in REITs. REITs can give you real estate exposure and is far more liquid compared to buying a piece of property. I'm not a REITs fan. I prefer physical real estate. Forces me to stay invested as opposed to REITs, which is more liquid and has room for emotions to creep in. You can also think about something like Fundrise, which makes investing in real estate much easier and affordable. Expect anywhere from 4 to 6% annually using the real estate option. Let's not forget, real estate is an appreciating asset and comes with tax breaks as well. You can depreciate a property that typically appreciates over time. Also, you can deduct interest on mortgage. Finally, it could be another source of income, rental income, if you have more than one property. And rent automatically adjusts to inflation. As cost of living goes up, rent goes up. With record low interest rate, it might make sense to park your cash in real estate. Gold is considered a safe haven or a store of value, usually a good hedge against inflation. The best way to park your cash in gold is by buying gold ETF GLD. You can also look at gold miners via ETF GDX. Then there are non-traditional assets like cryptocurrency. If safety is big on your list, I would stick with some of the options I discussed earlier and stay away from crypto. Having said that, I do believe Bitcoin is the real deal. By the way, I believe bonds is not an option at all. Given the yield, never understood why people park their money into bonds. Here's the bottom line. Locking your money in a bank is bad. Stop losing your savings and start investing. I usually tell people to spread their money around, a little bit in stocks, retirement accounts, real estate, and maybe gold. Personally, I'm a big crypto bull and have started to put money into this space as well. I still think it is speculation and not for everyone. Stay tuned for more videos around the crypto space. Thanks for tuning in. Hit like if this was helpful. Until next time, peace.